Hi, I hope you're having a great week. There are two developments this week in COVID and real estate that I just wanted to make you aware of. The first being that the virtual world of real estate has really gained momentum. It's obviously looking different than a normal traditional spring market would. However, the numbers that we're seeing in terms of accepted offers from buyers and sellers, new listings coming on the market, and new buyers coming on the market and pulling the trigger is just continuing to increase. We have had phenomenal success with getting people from contract to closing, under contract, with virtual tours, virtual home inspections, with the ability to write in creative ways and contingencies to make sure that the buyers are protected, the sellers are protected, the house is seen, the house is properly inspected. And again, although it looks different from a traditional transaction that would have happened, a month and a half ago, it is the fact that it's gaining so much momentum, and the fact that we're having such an increase in accepted offers is showing that it is a very real process that is having very real success. So, although it's not, parts of it are not ideal, we are working through them and we are still seamlessly able to guide you through that transaction, should you need to buy or sell right now. So that's the first development, is that although that traditional spring market doesn't look the same as it would normally, it is still bursting in some sense in terms of the spring market. So we are still seeing some spring market happening right now between buyers and sellers, which leads us to believe even more so that when this is lifted and when pause does end, we will see that traditional spring market really come to fruition in the traditional sense at that point, because we've had just so much momentum leading up to it, which we talked about last week, that we are really projecting a big burst mid to end of summer that would have been the traditional spring market, that it would have happened in April, if we had not had COVID. So that's the first development as to what we're seeing in real estate with transactions, buyers and sellers. And again, there are so many ways that we're building in to protect all our buyers and all of our sellers in this virtual world, that if you have any questions about, please reach out and we would love to tell you more about them and talk you through and coach you through what those look like. The second development is that this week, the House and the Senate approved another additional relief package of $484 billion to the different programs, that being the Paycheck Protection Program and EIDL, and some additional relief programs that they funded the first time around with the first relief package. I'm telling you this because some of you have not even had to think about the Paycheck Protection Program or EIDL and don't really know what that looks like, don't really know what that does. Some of you, especially business owners, are very all too familiar with it and probably know more than you want to know about it. What I wanted to touch on very quickly with that, because every business, every person, every job is different, is basically what those two loans do. Very, very brief overview, because again, it's going to be different person to person, situation to situation, and what this new funding means. So the Paycheck Protection Program covers people who have their own business or are independent contractors and pay themselves or pay out employees through payroll. It covers certain portions of that payroll, certain portions are excluded, and you can discuss that more in depth with a local lender who is admitting and who is submitting these loans, or you can talk more in depth to your accountant about it. But it covers certain portions of those payroll expenses. And the big piece of this is that although it comes in the form of a loan through a local bank, because both of these programs are SBA funded, Small Business Association funded by the government. That being said, there are local banks that are submitting these applications, and so they are the ones administering these loans, but it's getting funded by the federal government. So you can go through a local bank to do that. If you would like the name of some of those banks, we have a whole list and we would love to provide those to you if you are interested. But it covers certain portions of your payroll. And the biggest piece is that loan amount that you're getting to cover your payroll is forgiven if used for payroll and specific other expenses and or specific other expenses. And those other expenses are kind of in writing and they're specified, but it's kind of up in the air right now as to if additional expenses beyond what they've already listed out as being covered will be covered as well. The main focus is payroll though. So that's payroll, Paycheck Protection, and that covers payroll. And I tell you this because independent contractors can qualify depending on their situation, again, small businesses. But with the first round of funding, I wanted to make this so clear because with the first round of funding, it ran out in just under 2 weeks. And that was $300+ billion worth of funding. I believe it was $349 billion worth of funding, and it went in the blink of an eye. So this new round of funding is going to be opened back up for applications as of 10:30 on Monday morning. So it's very important that if you didn't get in that first round of funding, that you take advantage of it as fast as possible this upcoming week. And again, if you need the name of any local lenders who are submitting applications and taking applications for this program, please let us know and we can absolutely give you names of those people. So again, most important piece of this is that this forgiveness loan or this payroll loan is forgiven if used for these specific purposes. So that is the big piece with the relief program there. And then the EIDL is a loan from the SBA for relief, and the first portion of it is forgiven as well. And I'm reluctant to say how much because it really depends on your business. Per employee, they'll forgive a certain portion, a certain amount per employee. But again, it depends on your business, and I don't want to give any specifics just because it's different from business to business or from job to job. So that being said, it's both loans are very, very low interest. They can have deferments out to 6 months and beyond. And so there's a lot of perks when it comes to these loans, and they can act as bridge loans, again, with forgiveness, which is the big piece when used for certain purposes. So I tell you this because there's an additional, I believe, $60 billion that's been put into the EIDL funding because that's running low. And so this round of funding has replenished these loan amounts amongst other things, but they will run out quickly. And I wanted to make you aware so that if you do want to take advantage of them, please reach out. And if you have any questions about it, and let us know. We'd love to help because they are great opportunities right now for certain individuals who may not qualify for unemployment, pandemic unemployment, other measures that may not fit into different jobs or different business situations. So those are the two big updates. The only other thing that I do want to mention about the PPP and the EIDL that we have learned is that if your business or your situation does apply and if you do get those loans, it could affect your ability to refinance, for example. And that is really going to be based from lender to lender on their requirements and their qualifications. But we have found that, for example, if you run a sole proprietorship or a partnership and you're applying for different relief programs through the SBA right now, just because of the whole situation, that may not look good, basically, for your income source if you do go to refinance or get a loan. It certainly doesn't rule you out immediately, but depending on the lender, they could look at that as not favorable, or it could be that they're giving you a loan that will be sold on the secondary market to Fannie or Freddie, and Fannie or Freddie may not look on that favorably because it's such a new situation that we've never run into before. A lot of lenders are just trying to navigate it themselves. So that is something that could come up, or it could not be an issue at all. However, just be aware that that could happen. If you have any questions, please let us know. Again, this funding is a great opportunity for different situations. Take advantage of it as soon as possible. If you need the names of any contacts to call or discuss or get applications submitted, reach out. We'll get those over to you fast, and you can get on your way in terms of submitting an application. I hope everyone has a great week, that you're all staying safe and sane. And again, we're here as a resource. If we can help in any way, please let us know. We'll talk to you soon.